بسم الله الرحمن الرحيم. الحمد لله الحمد لله وكفى وسلام على عباده الذين اصطفى. أما بعد، قال الله تعالى في كتابه المبين: والعصر إن الإنسان لفي خسر إلا الذين آمنوا وعملوا الصالحات وتواصوا بالحق وتواصوا بالصبر. صدق الله العظيم. رب اشرح لي صدري ويسر لي أمري واحلل عقدة من لساني يفقه قولي. سبحانك لا علم لنا إلا ما علمتنا إنك أنت العليم الحكيم. Honorable participants, indeed it is a great pleasure to have you with us. On behalf of the Jamiatul Ulama South Africa, I would like to welcome one and all to this webinar. I sincerely hope that it will be one of great benefit and you will leave empowered with the knowledge of Zakah and the necessary application. At the same time, I wish to, first of all, in the first half of our webinar, try to simplify the topic of Zakah as best as possible. And this is purely due to our experience informing us that while many individuals do try their level best to fulfill their Zakah obligation, there are a sufficient number of individuals who live with fear to approach the topic of Zakah and fulfill their Zakah obligation. In this webinar, I will be looking past the aspect of the economic rationale of Zakah. Similarly, we'll be looking past the aspect of the benefits of paying Zakah to the payer, payee, society in general. And we'll also not be addressing the aspect of virtues of paying Zakah and the warnings for not paying Zakah. In other words, our webinar is confined purely to the calculation, the Zakah equation itself, and the particular assets, deductible liabilities, and valid recipients, non-valid recipients, and so forth. So I will also not be going into great detail regarding the nisab itself. It's an interesting concept. Many individuals are interested in understanding the pros and cons of a nisab and how a nisab operates and how it is arrived at. But for purposes of our webinar, we will not be going into that particular aspect. So in the first half of our webinar, we'll be touching on the aspect of the basic element of Zakah itself. And in the latter half, we prefer to just call it an intermediate level of approaching the topic of Zakah, in the sense that we just unpack the particular assets in greater detail. So in the first half, if anyone is constrained with time, you are free to leave at that point. And at the second half, I'll indicate exactly where we then move on to the aspect of the intermediate or the more detailed aspects of Zakah itself. These are our contact details. If anyone is constrained with time and does have a question, we probably will not have time for all questions, but these are our details up front for anyone to take them down and send communication through. The benefit of using our telephone number is that an individual can essentially hide behind the cloak of anonymity and basically present their questions and receive adequate attention to their matters of Sharia and their personal lives. If anyone is comfortable to use the email address, it is also on the screen, and you're welcome to send your queries to this particular address, ifta@jamiatsa.org. In terms of an introduction and an overview, in section 1, as I mentioned earlier on, we take a basic and an essential approach to Zakah, where we firstly touch on the overarching rules of Zakah. These are some of the most crucial rules that even muftis consider in their responses to questions. Then we take a look at the Zakah equation itself and simplify it as best as possible. Then we look at the particular parts of the Zakah equation, firstly made up of the Zakatable assets. Then we look at the non-Zakatable assets in brief, and in these two aspects, the Zakaatable assets and non-Zakaatable assets, we do not go into extensive detail. Then we look at the next part of the Zakah equation, which comprises of deductible liabilities. Then we touch on the important aspect of determining an assessment date. In other words, we expound on the common understanding or misconception regarding the one-year rule. This is something which we'll dedicate a few slides to, given the widespread misconception of the one-year rule. We look at valid and non-valid recipients. We look at how to identify a worthy recipient. This is against the backdrop of so many individuals wanting to be discharging their zakah personally instead of use the intermediary of an organization. Then we come to the intermediate phase of the zakah aspect, and we look at the assets and liabilities in greater detail. We also look at the understanding of nisab if time permits. At this juncture of section 2, I would say at this point, so to say, if the House feels that we should rather go for a Q&A due to time constraints, by all means, we can digress and obviously encourage our participants who are interested in a more sophisticated understanding of zakah to join our other events, which are due to take place in coming days and weeks. With that said, we'll try our best to cover the assets and liabilities in greater detail at the intermediate stage of our presentation, inshallah. As far as the overarching rules are concerned, the first and probably one of the most crucial rules is the rule of ownership and possession. This, in essence, is a rule that applies to whether a particular asset needs to be subjected to zakah or not. So, in essence, the rule means that for any asset to be subjected to zakah, the asset needs to be owned, first of all, and it needs to be in one's possession. So if I use a simple example of ownership, let's take a scenario where we only have ownership, we don't have possession. Here, a classic scenario is that of an occupational pension fund that an individual owns. It belongs to the employee, but the individual does not enjoy unfettered and unrestricted possession over the funds, in the sense that they cannot tap into that reserve of wealth. They would need to cross a few hurdles, so to say, and go through a few steps before having access to the funds. So here's a scenario of an occupational pension fund, which is owned by the individual. It's an asset, it's owned by the individual, but it is not possessed by the individual. Hence, the occupational pension fund is usually exempted from zakah. Then the scenario of possession. So you have the scenario of a landlord who may be holding a deposit on behalf of the tenant. Here is a scenario of an asset being possessed by an individual, physically in their possession, but it is not truly their ownership and their property, in the sense that it belongs to the tenant for all intents and purposes as things currently stand. And this is why the particular asset, although it may be a significant sum of money or cash, it would not have to be subjected to zakah. Then the second important overarching rule is that of deemed possession, where there are particular assets that an individual suspects to be the possession is one suspects that it's incomplete, whereas from the eyes of the Sharia, it is seen as or classified as a form of genuine and legitimate possession. So we refer to this as deemed possession, just as in the accounting parlance you have concepts like interest and deemed interest. In the same way, from a Sharia perspective, we have possession and you have deemed possession. An example of this is a scenario where an individual has subscribed to some form of, let's call it retirement planning. So it's a product that they subscribe to, they contribute on a regular basis to it, and there's absolutely no access to that fund until the individual reaches a particular threshold in terms of their age. Only beyond that particular age, there's some level of access granted to the individual. So here's a scenario where you have an asset. It's not in the possession physically, in the sense that in the immediate short term, the individual can't just tap into that reserve of wealth. But from a Sharia perspective, it is classified as deemed possession purely on the basis of having voluntarily subscribed to that particular product and having surrendered possession over the reserve of wealth. So this is the second overarching rule that we normally apply in determining whether an asset is zakatable or not zakatable. The third rule is the aspect of ownership transfer. This is critical in the sense that whenever zakah is granted to an individual, ownership has to transfer from one natural person to another natural person. Ownership must transfer to the individual and it cannot just be made available. The zakatable asset cannot just be made available or at the disposal of the recipient. So an example of this would be where we utilize zakah funds to prepare a meal and we invite the poor recipients, deserving recipients, to a meal, and they're only allowed to consume the meal that has been prepared for the next hour or two, for example. In this scenario, this would not constitute a valid ownership transfer. So I just want to digress and make one thing very clear. If in this particular scenario, we utilize zakah funds to prepare food parcels, and the actual food, the cooked food is given over to the poor person or deserving recipient in a parcel, and ownership is now transferred in the sense that we give the individual the food parcel for them to decide when to consume the food or who to feed it to. So the two scenarios are different. This should be clear in our minds that there is some scope for utilizing zakah in the feeding scheme context, but we just need to ensure that the rule of ownership transfer does find expression. The next rule is the rule of the recipient being a natural person. When discharging zakah, the zakah discharge itself has to be received by a natural person. It cannot be a juristic person. So if I use an example here, in the recent past, we saw individuals utilizing zakah funds to purchase oxygenators. And these oxygenators were given to hospices and hospitals for them to utilize on COVID patients. So it is a good cause, yes, and we support it. From a Sharia perspective, I want to emphasize that we can find ways in which the same charity can find expression. But to utilize zakah in this particular context, where the oxygenator does not become the property of a natural person, it just belongs to the hospice, it belongs to that legal entity, and when the natural person is recovered and well, they leave the hospice or they leave the place of care, and they no longer have access to that particular zakatable asset. So the same can apply to an orphanage as well. You donate zakah funds to purchase, say, beds for the orphanage, and the beds remain the property of the orphanage. It does not go into the direct possession of or ownership of a natural person. Then we have the rule of the best interest of the poor. What this rule implies is that whenever we are contemplating subjecting an asset to zakah, there will be times when the situation is rather uncertain, in the sense that which value do we apply, and this particular rule speaks to the reality of the Sharia and the way in which the Sharia is alive to evolutionary changes. So if you think about assets, the definition of assets has evolved over time, and in our modern age, with the occurrence of digital assets, the definition of assets has changed even more rapidly. So there are likely to be scenarios where we don't know how to value a particular asset, or how much of a liability to deduct. So as a guiding rule, our fuqaha have stipulated that we'll use the best interest of the poor as a guide. So in terms of the asset side of zakatable assets, we'll always use a higher value to subject a particular asset to zakah. On the liability side, we'll try to exercise caution and deduct as little as possible a liability, so that the balance that we calculate zakat on is much more. So this is essentially the rule of the best interest of the poor. Then The rule of 1 year of asset ownership. What I'll prefer to do on this particular rule is not expound on it now in the interest of time, and rather go through it at a later stage when the slides come up. As it is, it's part of our basic aspect of Zakaah itself. Essentially, what we're trying to say here or imply is that there seems to be widespread misunderstanding as far as the 1 year rule of ownership is concerned. As far as the Zakaah equation is concerned, this is the area where so many individuals tend to misunderstand the aspect of Zakaah, and as a result, due to fear most of the time, stay away from actually fulfilling their Zakaah obligation. The Zakaah equation is as simple as this. Zakaatable assets, on the one hand, on the left side, we deduct particular liabilities or particular quantum of liabilities, so to say. We deduct our deductible liabilities, and the result of this deduction gives us our net Zakaatable wealth. Once we have our net Zakaatable wealth on hand, if it's above the Nisab rate, we multiply by 2.5%. If it is below the Nisab rate, we do not have to subject our wealth to 2.5% of Zakaah. So in terms of a calculator, if you've totaled all your assets, you've deducted all your liabilities, you arrive at the result on your calculator screen, all you have to do is punch the multiply button and 2.5 and punch the percentage button, and your result is on hand. It's as simple as that. As for individuals who are in the know, it will be seem frivolous to touch on this, but our experience informs us that way too many individuals are ignorant about how to calculate their Zakaah. This is something I've said before. If the net Zakaatable wealth in brackets on the screen is exceeding the Nisab rate, Zakaah will obviously be payable, subject to 2.5%. If the net Zakaatable wealth is below the Nisab rate, we do not have to multiply by 2.5%. This is as simple as the topic of Zakaah can get. And everything else just boils down to identifying the Zakaatable assets and the deductible liabilities. And we're on our way to calculating or fulfilling our Zakaah obligation. In terms of the Zakaatable assets, the first Zakaatable asset we have on hand is cash. Cash in any form needs to be subjected to Zakaah, whether it is on hand per se, or in a bank account, accessible in a bank account, or even in the shape and form of foreign currency. Then receivables, any cash equivalents that we are due to receive from someone. And we're not talking about promised gifts here. We're talking about a loan that has been given to someone and we expect repayment. This is what we're referring to when we talk about receivables and cash equivalents. Then gold and silver in any form. From a Hanafi fiqh perspective, gold and silver is subjected to Zakaah in any form, whether it's jewelry, whether it's a utensil, whether it's in use or not in use. All of it will have to be subjected to Zakaah. Then stock in trade is also needs to be subjected to Zakaah. At a later stage, we dive into the aspect of the stock in trade details. We have a participant whose voice is coming through. If you can please mute. On our side, we're in a silent room, so I'm not sure where it's definitely not from our side. If there's any participant whose mic is on, just would like to make a kind request to unmute. Sorry, to mute. Then investments in Zakaatable assets. If an individual has invested in, for example, gold coins, Kruger coins, Mandela coins, it's a Zakaatable asset and hence it would need to be subjected to Zakaah. Agricultural produce also has to be subjected to Zakaah. Any kind of crops may need to be subjected to Zakaah. The reason why we have an asterisk on this particular bullet item is because of the rarity with which it applies to our community. However, if it does apply to any participant in this webinar, you are welcome to contact me. or our office, and we'll try to assist as best as possible. There is some detail in terms of whether the land in South Africa needs to be subjected to Zakaah or not, or produce from the land in South Africa needs to be subjected to Zakaah or not. Then livestock also qualifies as a Zakaatable asset. Once again, we have an asterisk purely due to the fact that it applies to very few individuals who participate in our events. Those to whom it does apply, those individuals tend to contact us on their own and privately. In terms of non-Zakaatable assets, the first one we have is your personal residence. Any other immovable property, let's say you've got a holiday home in some part of the country or world, then it would not have to be subjected to Zakaah. Even though it's a holiday home, it would not have to be subjected to Zakaah. I will touch on the aspect of whether that holiday home is rented out and there are rental proceeds being received. That's a different matter altogether, but the property itself would not have to be subjected to Zakaah. Motor vehicles would not have to be subjected to Zakaah unless they are intended for resale, and obviously would then qualify as stock in trade on the previous slide. Furniture, same thing. Personal furniture does not have to be subjected to Zakaah. If the furniture is for resale, once again, it qualifies as stock in trade. Fixtures and fittings in an ordinary running concern business would not have to be subjected to Zakaah. Same goes for equipment like maybe a forklift or any other equipment that is part of a business. A somewhat different rule may apply to the aspect of raw material, which I'll discuss at an intermediate phase of the discussion, inshallah. Then precious items that are not for resale. Let's say you've got paintings that are not for resale, you've got stamp collection maybe, or gemstones maybe that are not for resale. They just have maybe an unusually exorbitant or amount of value to attach to them, but they're not intended for resale. These would not have to be subjected to Zakaah. Any non-gold or non-silver jewelry, any jewelry item or utensil, gold or silver item, utensil that is less than 50% gold or less than 50% silver would be classified as non-gold or non-silver, and hence would not have to be subjected to Zakaah. If there's any money that is out of circulation, I should have clarified this on the slide itself. If there's money that is out of circulation, it does not have buying power. In that case, the money would not have to be subjected to Zakaah. It's classified as a pure collectible item and is equivalent to any other collectible item in a home, even though it was once upon a time money. So it would not have to be subjected to Zakaah. The same goes for stamp collection, which is maybe rare, or any other kind of collector's item, which is not intended for resale, would not have to be subjected to Zakaah. Surplus in an excess bond. The reason why we've included this is because of the frequency with which we receive this particular question. And this is why I've included it on the basic discussion of Zakaah. If an individual has a conventional bond, and it should not be the case, but if an individual has one, and their facility allows them to make excess contributions over and above the minimum monthly payment. For those who are not in the know, usually these financial institutions allow you to tap into that excess money which you're pumping into your conventional bond. So if an individual has made those surplus payments and there is no intention to ever tap into it, primarily the intention is to pay it off as fast as possible to reduce the interest burden and so forth. In that case, the money that is contributed towards that excess bond would not have to be subjected to Zakaah. Last one is impermissible wealth. It goes without saying, impermissible wealth should not be in one's possession, but if it happens to be the case, then it will not have to be subjected to Zakaah. It does not mean that it is exempt from Zakaah, so an individual should hold impermissible wealth for a prolonged period. As far as possible, any impermissible wealth should be discharged among the poor without an intention of reward as soon as possible. Collateral, I mentioned this earlier on as an example. If an individual has put down collateral in a rental arrangement or a renting of commercial property and they put down a collateral amount, that collateral amount would not have to be Zakaatable on the basis of the reverse of the overarching rule I discussed earlier on, in the sense that The tenant is the owner of the funds, but is not possessing the funds. It's not in their hands to tap into as and when they feel like. It's lodged with the landlord, either residential property or commercial property, as a result of only meeting one of those criteria, which I referred to earlier on. As a result of that, will not be the collateral will not have to be subjected to zakah. Then our deductible liabilities. Short-term expenses for the current month, like your rent, if anyone has a rental arrangement, telephone bill, school fees, madrasa fees. There was a time when school and madrasa fees were payable monthly. In that case, anyway, it does still apply. Only 1 month's obligation can be deducted. However, we are now moving into a phase where many of these institutions require a full term's payment, even though the learner will not be at school or madrasa for the full term. And they withdrawing due to unforeseen circumstances. So in this type of scenario, whatever is the current obligation, which is non-negotiable, that amount can be deducted as it qualifies as a short-term expense. Then 12 months of installments on any long-term liability. So when we talk of long-term liabilities, it's akin to the accounting reference to long-term, anything that is a liability for more than a year. So let's take an example of an individual paying off a home loan. In that scenario, the fuqaha have stipulated that only 12 months of installments of the coming 12 months can be deducted. It's not the past 12 months, it's the coming 12 months which can be deducted. Here I must emphasize and digress a little bit. If the individual has a conventional bond, and it should not be the case, but if it does apply, we are currently of the view that only the principal amount multiplied by 12 can be deducted. The interest portion does not qualify as a valid deduction. And this is guided by the principle of more beneficial to the poor. This is why we say, as far as possible, you can deduct, yes, but only deduct the principal amount multiplied by 12, as opposed to including the principal with interest and then multiplying it by 12. And this would be too much a deduction and would be disadvantageous to the poor. In the scenario where an individual has got an Islamic financial arrangement, which is becoming much more common, I must acknowledge, amidst all the doom and gloom, there are many more individuals who are with Islamic financial institutions. If the zakah and the deductible liability aspect of zakah would depend on the structure of the financial arrangement. So if the financial arrangement is based on, or the product is structured on a murabaha basis, then 12 months of installments can be deducted in full. So it's the full monthly installment multiplied by 12, which can be deducted. If it is a musharaka arrangement, then we need to be a bit careful here. We are only allowed to deduct from the installments due from the zakat date until the next anniversary date. So if the next anniversary date is 3 months from our zakat date, we can only deduct 3 months of installments. That's purely based on the structure of the musharaka arrangement, which informs us of the zakah liability in the deductible liability portion. Once again, this principle is guided by, number one, the structure of the Sharia arrangement, and second of all, the rule of the best interest of the poor. Any debt that is payable in full within 12 months can be deducted. As long as the full amount is payable in the next 12 months, it can be deducted. So this is a classic case where the installment is not fixed, but the individual debtor has undertaken to settle that amount within the next 12 months. Unpaid zakah of past years, the 2.5% of wealth in each of the past years does qualify as a liability, and it can be deducted from the current year's zakah. Legally prescribed debt, here we're referring to a construct of the South African law, where if an individual owes money to someone or to some institution, and the person or the institution has not pursued the debtor for a consecutive period of 3 years, I think the law is still 3 years, then the debtor can raise a defense in a court of law stating that the debt has prescribed and they owe nothing. Now, from a South African legal perspective, yes, this does qualify and it's fine, but from a Sharia perspective, debt does not prescribe, with the passage of time. In essence, if an individual owes money, they owe money, period. Even if they reach a phase of genuine insolvency and they regain their solvency status, they would have to fulfill that obligation. This is purely due to the Sharia emphasis on the rights of man. If the rights of man are due, there's just no way that the rights of men lapse with the passage of time. They remain due and would remain on the shoulders of the individual debtor. Any personal loans or casual loans, as they call them, can qualify as deductible liabilities. So we might have the misconception that the liability is only deductible if it's with an institution. This is not the case. If the liability is with an individual or family member, it can be deducted. And if that amount if the individual has undertaken a particular installment for the month, it's that installment multiplied by 12. If the full amount is due within the next 12 months, by all means, the full amount can be deducted. Any account that is in arrears with the city of Johannesburg or whichever city you reside in, maybe rental arrangement is in arrears, may Allah forbid, any other arrear account. Again, it comes back to the point of rights of people. Hence, accounts in arrears, the full amount can be deducted. The same goes for a credit card. If an individual is owing money, and it should not be the case, but if an individual is owing money, it's not only the current amount or the minimum payment that can be deducted. In that scenario, it's the full amount that can be deducted. This is purely due to the fact that we're trying to minimize the individual's involvement in riba and interest. Hence, the full amount should be deducted. The full amount of wealth should be reserved for getting out of riba, as opposed to only deducting the minimum required payment and then still continuing in riba. Accrued expenses. A typical example of this is like your taxes, which are already due, just have not yet been paid. This can be deducted from one's asset base before subjecting the wealth to 2.5% of Zakaah. I would now go into the one-year rule, which there is quite a vast degree of misunderstanding. And this rule, or the one-year rule, also is related to the aspect of how we determine a Zakaah assessment date. Just while we're at this juncture, there is a question regarding the Shafi'i madhab. We have a dedicated mufti for that, and he will be participating in one of our upcoming events and will respond to some of the questions where the Shafi'i madhab is different. I'm just concerned about time, hence I will proceed on the aspect of the one-year rule. So I'm just going to go into the one-year rule, probably take a few minutes on that. I'm looking at time. We might just go into Q&A to cater for those who've scheduled only an hour for the webinar. And then if we still have our participants with us and still keen, I'm willing to proceed with the intermediate phase of the discussion, or postpone it for another event, inshallah. In terms of the one-year rule, the misconception that prevails in our society is that if you receive some wealth a few days before your Zakaah date, then that sum of wealth does not have to be subjected to Zakaah. This is not the case. Not always is it the case, rather. Instead, the one-year rule just means that when an individual has a specific designated Islamic date, then that date remains their Zakaah date perpetually for as long as that person is alive, most of the time. Once we have that date stipulated, all the individual needs to do is look at the beginning of the year and the end of the Zakaah year. If at both points the individual is in possession of surplus Zakaatable wealth after deducting all liabilities, in other words, Zakaah is due, then irrespective of the fluctuation in their wealth during the year, they would have to subject all their wealth to Zakaah, even though some portions of wealth have not been in their possession for the full year. So the one-year rule does not mean that you have to have a record of every 200 rand note and every 50 rand note and every little thing that is subjected to Zakaah you don't have to have a record for each item. The general rule is look at the beginning of the year, look at the end of the year. If at both points the individual is in possession of surplus Zakaatable wealth, all the wealth needs to be subjected to Zakah, irrespective of the fluctuation, whether it went above the Nisab rate or below the Nisab rate during the year. The only scenario where we have an exception to the rule is when the individual has a complete zero balance in their wealth during the year. In that case, the year that has been designated will lapse, and the new year will commence once again when the individual is in possession of surplus Zakaatable wealth after deducting liabilities. So what I've done is just stated the rule in brief. The next 5 slides are detailed slides on the particular examples of the 1-year rule and determining the Zakah assessment date. The determination, before I proceed on the slides itself, the determination of a Zakah assessment date, as you'll see in the coming 5 slides, is a very important indication and it's an alarm for many of us adults that when we manage the wealth of our children, we need to be very careful of determining that particular date when their wealth exceeded the Nisab rate. And then 1 year on from there, calculate their Zakah, if they are baligh. It's a request to speak a bit louder. I will try, inshallah. First example of our 1-year rule. Here's an individual who has the 1st of Shaban 1441 as their designated start of the year. And the year ends on the 1st of Shaban 1442. So it should actually be the last day of Jumad al-Ukhra. But anyway, for ease of reference, just to show you 2 years, I put it in this way, that it's 1441 and 1442. On the left side, we have our store of wealth, our wealth figure that is fluctuating. And this is our year, our time span. The green bars represent the wealth that is fluctuating from time to time throughout the months of the year. And the red line represents the Nisab rate, which fluctuates on a daily basis and is calculated by the Jamiatul Ulama South Africa as well as Radio Islam on a daily basis. So in this particular scenario, our rule prevails in the sense that the individual commenced their Zakah year with wealth exceeding the Nisab rate, and they've ended the year with wealth that is exceeding the Nisab rate. As a result, they would subject all their wealth to Zakah. Even though if you look at this particular example, this amount of wealth which came into their possession on the 1st of Jumad al-Ukhra 1442, this amount of wealth, or even any of these other bars here in the middle, have not been in possession for 12 months. But the rule still applies, and this wealth in this category here still has to be subjected to Zakah. There we have it. Our conclusion is Zakah is payable. In the next scenario, we have an individual who commences the Zakah year with wealth exceeding the Nisab rate. They ending the Zakah year with wealth exceeding the Nisab rate. There's a fluctuation, and the fluctuation is so diverse in the sense that at some months, at some points in the year, wealth is actually below the Nisab rate. With this said, even though there's wealth below the Nisab rate, the fact that they've commenced the year with Zakah wealth, they've ended the year with a Zakah, a positive position, they would need to subject all their wealth to Zakah. The third scenario is where an individual has a designated date for Zakah. It's the 1st of Shaban. In this particular year, the individual started the year, so the previous year was fine, but this year ended with, it's like they're commencing the year with wealth below the Nisab rate, and then they're ending the year with wealth that is exceeding the Nisab rate. In this particular year of the individual, only in this particular year, Zakah would not be payable, purely as a result of not commencing the year with wealth that is exceeding the Nisab rate. So this is the scenario where if one has a designated date. Now, let me just digress a little bit here. Let's say this particular scenario that we have presented applies to a child, and the child only becomes baligh on the 1st of Safar 1442. So we've noted that the child became baligh on this particular date here, and They have so much of wealth, which is exceeding the nisab rate, and the wealth is accumulated through maybe from the birth date, gifts received throughout the years of Eid. They received sums of cash, and there were some investments from the parents on the child's behalf, purely belonging to the child. This particular child now would commence their zakah year from the 1st of Safar 1442. The next year or 1 year later, they would subject their wealth to zakah. Earlier on, I made a point about this example of the 1 year rule will demonstrate quite a bit of detail in terms of the zakah assessment date. What I meant by that is, as you can see, zakah is not due in Ramadan. It's due 1 year after possessing surplus zakatable wealth. So we utilize, and there's great virtue in paying zakah in Ramadan. Yes, we are encouraged to do a portion of our zakah in Ramadan, but it does not have to be in Ramadan. Next scenario is a scenario where an individual has a designated zakah date. They commence the year below the nisab rate. Wealth is not exceeding the nisab rate after deducting liabilities. Similarly, the end of the year, wealth is not exceeding the nisab threshold after deducting liabilities, and the same condition prevails throughout the year. May Allah forbid. In this scenario, no zakah would be payable for this particular individual in this particular year. However, the zakah date remains the same. I just emphasize once again, the 1st of Shaban just means for now we need to assess it in the future. The last and final scenario is the scenario where an individual commences the year with wealth exceeding the nisab rate after deducting liability. They end the year with wealth exceeding the nisab rate after deducting liability. But during the year, on the 1st of Safar, there's a zero balance in their wealth. There's just nothing there. In this particular scenario, zakah would not be due. And in this particular scenario, the date of zakah will actually change, will actually shift. In this case, the zakah date of this particular individual would be the 1st of Rabiul Thani 1442, because this is the date when they now in possession of surplus zakatable wealth after deducting liabilities. 1 year from this date, they need to now subject their wealth to zakah. So it is only in this scenario where there's a zero balance in a particular year where the date shifts, and the date now shifts from the date that the individual is in possession of surplus zakatable wealth, and 1 year later they need to assess their position. This is very much our slides on the 1 year rule and the aspect of the whether zakat is due on all the wealth or not. Very quickly, I'll go on to the valid recipients and invalid recipients. First of all, we have a faqir, someone who has some wealth, but it's insufficient for their everyday needs. Such an individual can qualify as a valid recipient of zakah. And I will give you, this is probably the most prevalent form of a valid recipient, and I'll go into detail on how you can identify someone. Then we have the masakin who possess no wealth at all. These individuals also qualify as valid recipients of zakah, quite obvious and straightforward. Amilin are the zakah collectors who are designated by an Islamic state. They are entitled to a particular portion of zakah that is granted to them by zakah donor. Whether this applies in the South African context or not is an evolving aspect of research, and muftis are contemplating over this particular aspect. Then mu'allafatul qulub, potential new Muslims who are given zakah to encourage entry into Islam. I've noted in brackets here that this particular valid recipient is abrogated as a result of the consensus of the Sahaba radiallahu ta'ala majma'in. Riqab, slaves who can be freed. This obviously doesn't apply in our context of the modern world where slavery has already been abolished. Harimin, an individual who is in overwhelming debt. This is also a common scenario of a valid recipient. An individual who is in overwhelming debt, their wealth, their debts exceed their zakatable assets. Such individuals do qualify as valid recipients. Fi sabilillah, an individual who is needy whilst on Hajj or in the path of Allah or pursuing a path of learning. This pursuing a path of learning is a recent construct and a category which fits within the fi sabilillah according to some of the other madhahib. So this aspect of needy whilst on Hajj is referring to an individual who is traveling and has no access to the wealth. Bear in mind that in our modern world, individuals do have access to their wealth, sometimes through a bank account or a bank card, and there is access to their wealth. But if there tends to be a scenario where an individual maybe forgot their password, or they do have wealth, but they have no access to it, they could potentially fall in the category of fi sabilillah and qualify as recipient of zakah. Ibn Sabil is a stranded traveler without access to their wealth, as we mentioned earlier on. Non-valid recipient, the masjid, and this comes back to our overarching rule, which I outlined in the very beginning. We cannot give zakah to a juristic person, it has to go to a natural person. Bear in mind that when we give to an organization such as the Jamiatul Ulama South Africa or any other legitimate Dini organization, we are not giving to the organization. We are just appointing them as agents to discharge zakah on our behalf. So it should not be conflicting with the overarching rule I mentioned earlier on. Zakah itself cannot be given to a non-Muslim. This is a very touchy point from an emotional perspective, because individuals tend to question, why can't zakah be given to a non-Muslim? I know the person, they are destitute and they will accept Islam. Bear in mind that zakah is not the only obligation on our wealth. And this is why if zakah is not being given to a non-Muslim, then any other form of charity can be given. Waqf can be given to a non-Muslim. Nafil charity can be given to a non-Muslim. Sadaqah can be given to a non-Muslim, nafil sadaqah, but not zakah. Deceased estate cannot qualify as a valid recipient of zakah. So if you have an estate that is indebted, there's just not enough wealth, we cannot utilize our zakah. Family members or friends cannot contribute their zakah to the deceased estate for the deceased estate to now settle its obligation. That cannot constitute a valid discharge of zakah itself, purely because of the individual having ceased. A spouse, in terms of the Hanafi madhab, an individual cannot contribute their zakah to their spouse. A wealthy person obviously does not qualify as a valid recipient. Our ascendants, we cannot give, from a Hanafi perspective, our parents, grandparents, and upwards. Similarly, we cannot discharge our zakah to descendants, our children, grandchildren, and downwards. Irrespective of their need, they may qualify as valid recipients to receive other people's zakat donation, but they cannot qualify as recipients from the donor themselves. A Sayyid, any relative of Fatima radiallahu ta'ala anha, it can prevail, and anyone from the Banu Hashim, which are relatives of Sayyidina Ali radiallahu an, Ja'far radiallahu an, Aqil radiallahu an, Abbas radiallahu an, and Harith ibn Abdul Muttalib radiallahu ta'ala an. Identifying a worthy recipient, this is hopefully our last slide. According to the Hanafi school, the eligibility criteria for any recipient of zakah is as follows. What you need to look for is cash. If the individual has surplus cash on hand or cash in a bank account, gold in large quantities, silver in large quantities, any zakatable asset in investments which can be liquidated for fulfillment of their need. You're adding their stock in trade, and you're adding any assets which are above their basic necessity. So you don't need to pry into their personal lives and strip them of their dignity. All you need to do is just apply a fair degree of discretion, look for these particular items, and then you deduct the liabilities, if you know what liabilities could potentially prevail. If the amount is below the nisab rate, that individual would be eligible to receive zakah. As I mentioned, no need to pry into their personal affairs. When giving the zakah to a worthy recipient, there's no need to disclose the status of the money. The last bullet point here is that we should consider needy relatives first. According to one hadith, the reward is multiplied, one due to fulfilling the zakah obligation, and two due to fostering family ties. At this juncture, I would like to maybe just seek permission from the House. We are against time. It's already an hour. I do seek your forgiveness for not having foreseen the duration that will be taken in the presentation itself. Obviously, we lost out a few minutes in the beginning. We have one option now to go into Q&A, and then we can proceed with the intermediate phase of the discussion. Alternately, we can postpone, if your time is tight, we can postpone to another event, which is due to take place, where we discuss the intermediate aspects of zakah itself. If there are any questions, you are free to post them in the chat. Okay, I'm just going to go from the bottom, let me go from the top first. Okay, as I mentioned, any questions relating to the Shafi'i madhab can be sent to the same email address I mentioned earlier on, ifta@jamiatsa.org.za, or you may contact 011 373 8000. And we have a designated Shafi'i Mufti who can assist. In terms of the slides being shared post the session, we can try, inshallah. What we can make available is the recording. If the recording has been successful, we will try to make the recording available, inshallah. And then there's a question here to please advise on zakat on shares. Happy to email as well. Since there aren't any questions yet, I can go into this particular aspect of zakat on shares. And this forms part of our discussion on the intermediate aspect of zakah. Okay, here we have it. So if you have shares, which is obviously listed equity, the misconception here is zakah is only payable on the growth per annum. So if let's say invested 100,000 rand, and the 100,000 rand in year one has now accumulated to 105,000 rand, for example, there is a misconception that only 5,000 would have to be subjected to zakah. Why I say this is a misconception is because zakah needs to be payable on that full value of the asset, the net realizable value of that asset. This misconception stems from individuals viewing zakah based on an income statement concept, as opposed to viewing zakah as a balance sheet concept. So the balance sheet understanding should prevail when contemplating over how zakah is calculated. The non-Sharia approved shares, obviously zakah is only payable on the capital investment that the individual voluntarily put down and contributed towards the investment itself. It's only on the capital investment, not on the capital plus proceeds. And this purely because the proceeds are property of the poor and need to be distributed without an intention of reward. In terms of the zakah on shares itself, this would depend very much on the strategy with which the listed shares are held. If the listed shares are held with a buy and hold strategy or saving strategy or like a store of wealth strategy, then zakah is not due on the full market value of the listed equity investment. Zakah is only due on the underlying zakatable assets of the company itself. And I'll come to this on how you do the calculation in this regard. Then, if the strategy of the listed equity is active trading, it's basically the intention is to sell and capture short-term price fluctuation, positive price fluctuation. In this case, zakah would be due on the full value of the investment at market value. In terms of the assessment of shares, as I promised earlier, we're obviously going to use now, this is a buy and hold strategy, where we're going to use the company's balance sheet to determine the value of underlying zakatable assets. We're obviously going to deduct liabilities based on the latest available financial statements, and using our zakatable, our designated date of zakah, obviously. So once we've deducted the liabilities from zakatable assets, because not all assets in that company are going to be zakatable, after making the deduction, we arrive at our net zakatable value. In step 2, we determine the shareholders' net zakatable value based on the number of shares held. So here's an example. In step 1, the company's net zakatable value after deducting all liabilities, zakatable assets only, comprises of 10 million rand. And our issued shares are 100,000, for example. In step 2, the individual holds 10,000 shares, which is just 10% of the total amount of issued shares. The zakah payable is thus 10 million, which is the company's net zakatable value, multiplied by 10% for the holding of the individual shareholder, multiplied by 2.5%. If we're using an Islamic date, if we're using a Gregorian date, we recommend to use 2.577, and then we arrive at our zakat payable. This is as far as the question of zakah on shares is concerned. I hope that responds to the question itself. Then there's a question about a lady over 60 has a daughter and son who are unable to help. Mother left house to her and no nisab. Make oil is living. I see this question is from a sister to us. I'm not clear on this particular question. I would sincerely request you to just email us and we'll try to, or even contact us telephonically if you want to, or comfortable doing so. And we're happy to discuss this particular question. At this stage, I'm not too clear on the question, and it would be unfair to respond to a question without adequate information. Then there's a question on advice on 9-karat gold. Sorry for that. The fatwa of the Jamiatul Ulama South Africa is that zakah is not due on 9-karat gold due to less than 50% of the item being gold. As a result, zakah is not due. However, there is a fatwa of other muftis stating that as a precautionary measure, an individual can subject their 9-karat gold to zakah. So we can provide the figures if an individual does have 9-karat gold. We can advise on the particular rates that need to be used and adopted for the zakat calculation. Then we have a question: how is the nisab amount calculated? Very interesting, very pertinent question. We have slides on the aspect of the nisab amount. My fear at the moment is time. So in brief, the nisab itself in the context of Nabi Sallallahu Alaihi Wasallam, or the prophetic era, was essentially one. However, there were two, because the system of money in the time of Nabi Sallallahu Alaihi Wasallam operated on the bimetallic standard. What we mean by bimetallic standard is that gold and silver were in equal circulation in the time, unlike our age and era where we only have one particular currency applicable in a particular country. So in the time of Nabi Sallallahu Alaihi Wasallam, we had the bimetallic standard. The gold was applicable, silver was applicable, and both were in circulation. And a 1:10 ratio applied, in the sense that in the hadith we have from Sahih Muslim, Nabi Sallallahu Alaihi Wasallam mentioned that 200 silver dirhams would constitute the minimum ratio of nisab for silver, and 20 dinars, gold dinar, would constitute the nisab for gold itself. So what the fuqaha have done is calculated the equivalent gram value of these two silver and gold nisabs that were mentioned by Nabi Sallallahu Alaihi Wasallam. And the conclusion they arrived at is that 200 silver dirhams amounts to 612.36 grams in modern times. And 20 gold dinars amounts to 87.48 grams of gold. Much more can be said in terms of how the nisab rate applies to an individual. I hope that for now I've responded to the question of how is the nisab amount calculated. What I can just add on that score is that we utilize the silver nisab rate currently due to the fact that it obligates zakah on more individuals and is more beneficial to the poor. However, there is emerging research on gold nisab itself at our office and other institutions, and that research is due to be finalized in due course. The question then is, what about investments that are locked in with no access for 5 years? If an individual has a voluntary investment, purely voluntary, it's not occupational, and the individual has voluntarily lodged the investment and it's locked for 5 years. This is a question that is covered under the overarching rule I talked about of deemed possession. This is automatically classified as a form of possession due to the voluntary nature of having lodged the investment for 5 years. So there would be zakah applicable in this scenario based on the current information that is made available. Why I say the current information is because I would need clarity here in terms of whether the investment was gifted by an employer to the individual employee and it is locked off for 5 years. That would throw a different spin to the scenario itself. Okay, I suspect the next one about money to pay for transfer of house to her name and owes rates and taxes and property. Would she qualify for Zakaah? Again, you know, the reason why I'm not clear, despite the new information, I appreciate the new information. It's just that the hadith of Nabi Sallallahu Alaihi Wasallam on the authority of Aisha radiallahu ta'ala anha is that when Zakah is commingled with other property, if the Zakah is not correctly discharged, then it can destroy all the wealth. That is what the hadith of Nabi Sallallahu Alaihi Wasallam say. But the other interpretation provided by the fuqaha is that if the zakah is given to the incorrect recipient, it will affect the wealth of the recipient and could destroy the wealth of the recipient. And this is why I'm saying that the determining of a recipient is sensitive, and this is why I need more clarity. This is a follow-on question. In the time of Rasulullah Sallallahu Alaihi Wasallam, was the value of 1 ounce of gold equal to the value of 21 ounces of silver? Look, I've not looked into the ounce values. I have the work done. I didn't prepare for it, and I will acknowledge that I will need to look into the ounce value, because the ounce and the gram value, there is a difference and a variance there, and I would need to look into this particular aspect but in more detail. Jazakallah for the comment there, very insightful. Yes, I agree with Brother Azhar that the difference is definitely vast. This decoupling between gold and silver has definitely been the case. And this is precisely why, even at our office and many other fatwa institutions, there is evolving research on whether we should be shifting to the gold as a nisab rate. If you think about it, just to give context to Brother Azhar's question, if you look at the nisab rate currently, which is based on silver, we're looking at 8,500 rand. I'm sure most participants, if not all, would agree that in the current time and age, 8,500 rand is very little to live on. Whereas the nisab rate is meant to be a figure which is sufficient for an individual for an entire year. That is actually the purport of what the nisab rate should achieve. So I concede, and what I would just like to add, and as a closing comment on that particular point, is that the call to adopt gold as an nisab rate is not for an individual. It's an institution. It's the conglomeration of institutions that need to come together and collaborate on whether gold should be adopted as a zakat nisab rate. Then there's a question, are you able to discuss the issue of life policies and the ruling? One is if you take this out in your personal capacity, and the other is when there is a group life policy which is compulsory when joining the company. Yes, I can address this particular question. If an individual is part of a group life policy and it's imposed by the employer, when I say imposed by an employer, I mean they recommend it and they prefer that all employees are on just to make the HR management more easier. In this case, the group life policy would not be subjected to Zakah. If it is purely voluntary, and the subscription is purely voluntary, and the life policy is non-Sharia compliant, then only the capital contributions to the life policy would be subjected to Zakah. If it is Sharia approved, and there is one particular product similar to this, if it is Sharia approved, then based on the product that I'm familiar with, there would still be no Zakah implication, purely because of the structure. The structure is based on waqf. If the structure of the life policy is not waqf, it's mudaraba or murabaha or some other structure, usually it's wakala and mudaraba. In that case, there would be Zakah implications. If it's a life policy and Sharia approved based on any other concept other than waqf, then there would be Zakah implications on the net realizable value of the life policy. Jazakallah khair for the comment. I don't see any further questions. I take it that we are done with questions. We do have the intermediate phase, which was intended to cover, but is difficult due to time constraints. With permission from our participants, I would prefer to encourage our participants to participate in our other events. We have one specifically for our sisters due to take place on Friday afternoon between 3 and 4 p.m. inshallah. We'll just be responding to questions that we receive on our telephone line and our emails from sisters. And it's purely a female's perspective to the aspect of zakah, inshallah. A feedback form will be sent, inshallah. And individuals are encouraged to fill out that form for us so that we can improve on our offering, inshallah. Just give me a minute. The feedback form has been sent, and all are encouraged to fill out the form so that we can improve on our offering, inshallah. I would like to thank one and all for participating in the webinar. I do hope that it was fulfilling and empowering and provide sufficient information for you to execute your zakah obligation and even assist others in doing so. If there are any questions, you're welcome to contact us on our email as well as our telephone line. Ahmed, I've noted the comment there from Brother Naeem. A deceased left stock worth 20,000, but wages still owing to employees, they have to pay zakat. Remember, in the case of a deceased person who has passed on without their zakah year having arrived, there would be no zakah for the current year. Yes, if the past year was due and they did not pay their past zakah obligations, then by all means their zakah would need to be fulfilled for the past year. Added to that, bear in mind that the debt obligations precede the zakah obligations. In this case, the debt obligations to the employees would have to be dealt with first, and then so it's burial expenses, followed by all their debts, including the employees who are due to be paid. Then the 1/3 for missed religious obligations such as salah, zakah, fasting, and so forth. And fourth comes the distribution among the heirs. I hope that this suffices as a response for that particular question. If there's any more detail required, please feel free to email us and I will gladly try to respond. Jazakallah khair to all our participants. I do look forward to having one and all on our future events. With your permission, I would like to call this session as closed and invite one and all to participate and provide our feedback. Please do provide us with your feedback so that we can improve our future offerings, inshallah. Shukran for all the comments. Jazakallah once again. Assalamu alaikum wa rahmatullahi wa barakatuh.